All right, morning, guys. Big three stories today. First off, let's take a look at the Friday. Stock futures fell a little bit today, so expect a kind of moderate day. But so far this month, the Dow, S&P, they're all up about 5-6%. Disney Plus is on fire. Disney reported earnings yesterday. They're obviously, the theme parks are closed. Things are not going well there, but Disney Plus is on fire. 95 million subscribers, much better than expected. Still waiting on airlines to report earnings. Air Canada reported this morning, bit of a disappointment. Canada, there's big COVID delays, which is potentially going to cause down the line issues with stock performance. Nothing mentioned yet. And obviously Trump's impeachment trial. Those are the big news. I do want to talk about spousal RSP contributions though today, guys. I believe spousal RSP contributions are something that most people don't understand. So let's break it down real quick. So basically a spousal RSP contribution, effectively you get one person contributing, all right, and for another person's name. So the individual who's contributing typically will have a much higher income. Okay. So that person is the contributor to the plan. And the other person, the spouse with the lower income, is going to be the annuitant. Okay. So the individual with the higher income contributes, the other person owns the assets, the other person is the owner of the plan and the annuitant. Why do you do this? Obviously, if one spouse is making significantly more than the other, you're taking advantage of potential future income tax splitting, income tax arbitrage. You could also take advantage of the fact that down the line, you'll be able to do better income splitting, also be able to effectively allocate and do better financial planning for the assets. So the key here is that not only now, but in retirement, there needs to be a disparity of income. So you don't want to be in a situation where I'm contributing to my spousal RSP and then to my wife's spousal RSP. And then in retirement, she's got a huge pension and I have no income. Okay, maybe I had a high income now, but you must also consider the income expected at retirement. The other big thing that you guys need to worry about when making a spousal RSP contribution is that the fact that you can then withdraw the RSPs and take the assets out in your own name is attractive, right? That's an attractive fact because I contribute and perhaps my wife, maybe she's not working for a few years, she could withdraw that income effectively tax-free. However, there's a 3-year attribution rule. So you cannot withdraw the RSPs in a spousal account in your own name and declare that as personal income unless it's been at least 3 years that you've contributed to the spousal RSP. A lot of people forget about that one. So you contribute, higher income earner expected to have more income than the spouse at retirement. You use tax arbitrage. It's great for financial planning, can improve income splitting. Something to consider, guys. The RSP deadline, March 1st this year. All right, let's take a look at those pre-market boards. What do we got? Canadian dollar down 30 basis points to 78.42. The Dow futures are minus 29, which is pretty much the weather here in Winnipeg, Manitoba, Canada, to 31,330. If we take a look at gold, I'm not kidding. It was like, I think it's actually minus 34. Anyways, gold is down $11 to 18.14 and oil is down 20 cents to 58.04. Have a great weekend.